When it comes to supersized financial stuff, the United States tends to dominate the rankings. It's got the world's biggest economy, largest capital markets, and most sought-after currency. But when it comes to debt, at least among rich countries, Japan wears the crown. Its debt load is more than twice the size of its economy. It's been like that for years, without causing a stir on financial markets. Until now. So on this week's show, we take a look at Japan's debt mountain and its implications for borrowers around the world. It's what we do here on Reuters Econ World. Every week, we pick a phrase or buzzword and go deep on the economic principles and ideas driving the biggest news around the world. So this week, Japan's debt. I'm your host, Carmel Crimmins in Dublin. So we'll get into why Japan has so much debt later in the pod. But first, how has it managed to have such a high debt load? Because normally financial markets don't like it if your borrowings dwarf the size of your economy. Particularly if your economy isn't growing much. But Japan, traditionally, has had two things going for it. First, its borrowing costs have been super low because the Bank of Japan has spent years slashing interest rates to try and get the economy growing again. And second of all, most of its debt is held domestically by life insurance companies and pension funds, and also, crucially, by the Bank of Japan itself. That means Japanese government bonds always had a steady market, insulated from the whims of foreign investors. But both of those things are changing. The Bank of Japan has started raising interest rates as inflation re-emerges. And it's trimming or tapering its huge bond buying. Weak demand for Japanese government bonds, particularly for longer-term ones, has caused the price of those bonds to fall and their yields to rise. The yield is the interest rate paid to investors to buy the bond. So higher yields mean higher borrowing costs, which is a problem for a government with such a big debt load and one that's heading into parliamentary elections next month. But it also has ramifications beyond Japan's shores, because rising yields in Japan encourages Japanese investors to pull funds from overseas debt markets. And that raises borrowing costs there too. It's what makes the price of Japanese debt so important for the world economy, and encouraged me to call up two experts on Japan and financial markets. Leika Kihara is Reuters' chief Bank of Japan correspondent, and Vidya Ranganathan is our editor for Finance and Markets Breaking News in Singapore. Hey Leika, hey Vidya, how's it going?
Hello, hi, I'm good.
Hi, Carmel. Good to be here.
Leika, let's get straight into it. Why does Japan have so much debt?
Yes, it's a combination of a lot of things, but I think the biggest factor is Japan's rapidly aging population, which is leading to an increase in spending to fund social welfare costs and pension. That's been something Japan has been struggling with for such a long time, and there's been efforts to raise the birth rate, which has been so far unsuccessful. So now we have a huge debt load trying to pay for a burgeoning social welfare costs with tax revenue that has been stagnant, partly because we haven't had inflation, which pushes up nominal tax revenue, but also because the economy itself has been very weak. So whenever governments try to raise tax, that causes a lot of public outcry, and there's very little political incentive to get Japan's fiscal house in order. Another thing is that the government was able to come up with big fiscal spending packages almost every year without having to worry about the rising cost of funding the debt, because the Bank of Japan has been keeping interest rates very low. So this has caused a lot of complacency And that's starting to change because the Bank of Japan has begun to raise interest rates. It's still at 0.5%, but just the idea that rates are going to rise in Japan is creating a rise in bond yields and therefore having a big repercussion. So it's been a chronic problem, but something is becoming more imminent here.
Does it feel like Japan is being reassessed by investors, Vidya?
It's kind of become the canary in this coal mine, right? What's happening in Japan is just being mimicked in the gilts and then in the US Treasury. So it's almost like Japan is becoming the test case for the rest of the world in this whole bond vigilantism.
How much of this is due to the Bank of Japan doing a 180 and ending, years of negative interest rates?
To be fair, they have hinted at this and they have been slowly and gradually reducing their presence in the markets. So it wasn't the Bank of Japan that actually caused this tremor in bond markets. It's been bubbling in one corner of bond markets or the other for the past, at least, I think, 12 months or so. We saw what happened in gilts in October last year. We saw it come again in gilts in January. And we need to remember that it's not just the Bank of Japan, which owns about 46% of this market. Nearly, I think, 88% of this market is held by the Japanese. It's by the lifers and pension funds. So Japan's problem is pretty contained.
Right.
It's just that it provoked investors worldwide to say, are we getting compensated enough for the risk we are taking? And apparently not. I mean, if you look at historically, 10-year bonds and longer term bonds have offered a sufficient cushion for bondholders, and they've become very complacent over the past 6 years or so. Okay, bonds are safe, we hold them, we don't need a term premium, as they call it. But suddenly it was the confluence of a few things. It was Trump's policies, this whole questioning the dollar strength, the dollar safety, the Moody's downgrade of US Treasuries. And in the midst of all that, the Bank of Japan is starting to ask bondholders, how slowly or how fast should we taper? And I think that set off those alarm bells and ringing everywhere in the world. And so it started with Japan, and then it became gilts, and then again US Treasuries. And now everywhere around the world, people are saying, you want us to buy long-term bonds, you better pay up.
One thing to take note of is that there's a huge dislocation between the super long bond yields that have spiked and the rest of the yield curve, which means the shorter term duration debt, which really haven't seen too much of a spike. I think that's one reason the BOJ is not too worried about what this all means for Japan's economy, because the super long bond yield, that part of the market is very unique. It's been held by a very small group of investors like life insurers and pension funds who have pretty much bought enough and have decided, okay, we don't need to buy as much anymore. I think it tells a lot about what's happening in Japan structurally. First of all, the younger generation isn't just saving. They're investing overseas. They're trying to find places where they can earn more because they know that Japan's rapidly aging society means that they might not be able to get as many pension when they retire. That's one thing. Another thing is Japan's political landscape. Now there's a lot of talk within the opposition and even ruling party lawmakers for Japan to cut its consumption tax rate, which is very controversial because it's a key source of revenue to fund the social welfare costs. So if you cut that rate, that means you're going to generate fewer revenues to pay for the future. And yet the argument for a tax cut is very popular because the Japanese population is now struggling with rising living costs, as with any other country. So the pain people are feeling imminently from rising inflation is drawing calls for tax cuts, which is not very good when you look at Japan's fiscal state. And then that feeds into the bond market. So it's in a cycle that's been going on for a long time. But now what's different is that it's causing more alarm within markets and pushing up bond yields. So in the end, I think the government will probably resist any temptation to actually cut the controversial consumption tax, but instead deliver significant or sizable amount of spending and try to appease the public ahead of an upper house election. That would be less damaging for Japan's fiscal state, but it will still mean more debt.
So Japan's Prime Minister Shigeru Ishiba warned recently that its budget situation was worse than Greece's. Now that's not the sort of comparison that political leaders normally like to make, although I will say that the Greek economy is in a much better place than it was, during the Eurozone debt crisis. But still, what was that all about, Leika?
I think, it was partly to kind of push back against very strong calls for big spending and big tax cuts because, the government understands the dangers of going down that route and causing a sharp bond yield spike. Because when Japan has such a huge public debt, just a small rise in bond yields would lead to a huge increase in funding debt. That means you have less money to pay for what the population wants. So for the government, you really want to make sure you don't cause a big market rout that gets you into trouble. So I think he used that very kind of strong, example because he knew that, yes, this will kind of make headlines and maybe convince the public that cutting tax is not a really good idea.
Could you give us an example? I mean, in terms of the sort of subsidies that are available in Japan,
Yeah,
are they very generous?
they are actually because the government has been offering subsidies aimed at curbing gasoline prices, utility bills, and then there's payouts for low-income households, which all makes sense. But the problem is that once you start offering subsidies to intentionally push down prices, it's really hard to stop. And you're sort of manipulating the market, which is not very good. And the second point is in Japan, most of the tax cut and subsidies are not targeted and are made in blanket terms.
Right, okay.
Which means that you're reaching out. You should actually focus on, people who need it most, but that's not happening.
Right.
So the cost merit isn't very good.
So you're giving to the rich and the poor.
Exactly.
Government bond auctions in Japan are usually really predictable and, honestly, from a reporting perspective, kind of boring. Until last month, when a sale of 20-year bonds bombed with the weakest demand in more than a decade, triggering alarm and higher yields around the world, from German bunds to US treasuries. It's a real-world example of the stress being felt in long-term government debt markets and shows why these auctions have suddenly become a big event for investors and financial journalists. So Vidya, why should people outside Japan be paying attention to what's happening in the market for Japanese government bonds, or JGBs as they're called?
So there's a broad picture of bond markets everywhere saying if Japan, which has debt at 250% of GDP and no problems for so many years, has now started seeing some problems, then we should be asking the same questions in other markets. That's one part of it. But the second question is that Japan just has so much of money overseas. I think there's $2.5 trillion worth that Japanese have in overseas markets. And the interesting thing here is, and it's good news for Japan and bad news for the rest of the world, is that because the yen is not on a one-way track down, it's actually appreciating. The Japanese lifers and pensions, they're going to be just say, oh, we can get the same returns at home.
Right.
Will they come back home? Yes, they will. And so I would not categorize this yet as a markets crisis. It's a case of a markets saying, pay us enough, we'll put the money back into the long-term bonds. And I think May is a season when in Japan, the pensions rebalance their books. And the lifers also take a big call on should we get back in? And people do suspect that the money will come back home. It's a matter of when.
That's a problem for the US government, right? They rely on Japanese investors to buy up their debt. And if President Trump's budget bill passes, then they're going to need more debt, to fund it.
I don't think the world is starting to say, let's wholesale run out of US assets. But the slow, gradual reduction of their holdings has now just accelerated a bit because of Trump. And what we saw in the past couple of months is that Japanese lifers, particularly Nochu, the regional bank, just complaining about the losses that they've suffered on US treasuries, on their holding of global bonds. And that is the reason why people expect that that money will come back home. And that's bad news because it's a cascading effect. If the Japanese, who are the biggest holders of these bonds, start coming back home, then everybody else has to follow because bonds are selling off big time.
It's funny, Leika, like we often talk about US exceptionalism, its ability to borrow cheaply because of the dollar being effectively like the world's currency. But there also seems to be Japanese exceptionalism too, right? But for very different reasons.
I feel like Japan is like a small sea of calmness in a world of big turbulence because we're seeing a lot of things happening overseas that's will likely have big impact on Japan's economy. But living here, things are as usual. People talk about rising rice prices, but there's very little talk about the huge impact Trump's tariffs or the bond market could have on their livelihood. And one thing is, as Vidya mentioned earlier, most of the Japanese government bonds are held by domestic investors, which means we're not exposed to the big market turbulence as in other countries. We have a huge debt, but we have been living with this for such a long time. And the reason, the rating agencies have not dramatically cut Japan's sovereign debt rating is that there's still scope for Japan to raise tax and raise revenue. The only problem is that the politicians are just not willing to take the risk. So worst come worst, we can always raise revenue. It's probably one of the reasons Japan is kind of not getting this huge impact from what's happening overseas. But I feel like, the clock is ticking and we shouldn't be complacent. And I think there's more sort of an alarm or awareness among the policymakers that this time is different. The BOJ is raising rates and this could continue. And what's happening overseas means that you cannot continue to rely on a safe group of investors always placing money on US treasuries or JGBs. So, we're entering a time of turbulence. And once the Japanese public starts to realize that, we might have a bigger market reaction that involves not just overseas investors, but the Japanese public.
That is so interesting because I was going to ask, where do we go from here? Does the debt just keep getting bigger and bigger?
I think that's the big question everyone's trying to answer, scratching their heads. One possibility is for Japan to have a dangerous inflation spiral where inflation pays the tax.
Right.
Another scenario is that rising prices and, eventually the government would have to raise tax. That cools consumption and the broader economy. And Japan slips back into low growth, low inflation again. Either scenario does not look very attractive. So the government is actually trying to generate a positive wage inflation cycle so that, households earn more wages. Therefore, they can pay for rising prices. And then you have a more vibrant economy. So, that's one way out. Another way out is probably trying to find a way to manage that debt load without causing a big market uproar. That's a very challenging thing to do, but I think it requires the central bank and the government that issues debt to really work together to find a way around. But in the end, it's really the political willingness to convince the public that there's this harsh reality. You need to raise tax or cut spending to pay for all this debt. It's been kind of can be kicked down the road for ages, but I think the time is approaching for that hard decision to be made.
A big thank you to Leika and Vidya. You can check out their work on Reuters.com and the Reuters app. Sound design, music composition, and engineering on this episode was by Josh Summer. Our podcast team includes Kim Vanell, Tara Oakes, Gail Issa, Christopher Wall-Jasper, Alex Summer, Jonah Green, David Spencer, and Sharon Reich-Garson. Our executive producer is Leela de Kretzer. Remember, for all your daily news, check out our weekday show, Reuters World News. You can catch it on the Reuters app or wherever you listen to your podcasts.